Yahoo Finance's Nicole Sinclair and Lee Munson, Chief Investment Officer at Portfolio Wealth Advisors, join me now with more on today's market action. Hi, Lee and Nicole.
Morning.
So, Nicole, let me start with you. Obviously, we had a very tumultuous past 2 weeks here. A lot of that stemming from what has been going on in the White House, all this uncertainty with President Trump. What will investors be watching this week?
Well, this week, one of the big events is Jackson Hole. This is this big meeting of central bankers, and especially after all of the tumult that you mentioned out of D.C., there's hope that there aren't going to be any big negative surprises. We've had this continued tone of dovishness, both from the Fed here in the U.S. and central banks around the world, especially the ECB. We want to hear, the markets want to hear continuation of that tone, maybe even a reinforcement of that tone. But we don't know exactly how much color or rhetoric will really get it all.
Exactly. And Lee, a lot of that uncertainty is driving Wall Street's moves recently. Sam Stovall, he's a chief investment strategist at CFRA research firm, and he pointed out in a note this morning that the S&P 500 is only down about 2.2% from its all-time high hit earlier in August. But he does warn that there could be a bigger correction or a bigger pullback on the way. What do you think? Do you think that we'll see stocks drop here?
You know, we've been saying this all summer. You know, a couple of weeks ago, the whole news was Jeffrey Gundlach and his thing about how he's buying puts on the market. I think that the viewers need to realize that all that these analysts are really saying, all that Sam and Jeffrey and all they're saying is that we expect more volatility, but I don't see a lot of conviction on the bear side. We have too much liquidity in the market. We have fundamental profits that are there. So I think that people need to think about a pullback of maybe 5 to 6% versus some big correction. Because you know why? When everybody wants something big, dramatic to happen, it ain't going to happen. And that's exactly where we are right now. Everybody wants 15, 20% off so they can go in and buy because they were underinvested during, post-election.
Right. So we'll,
and another thing this week is we are going to continue to get some big earnings reports. We thought it was all over, but it's not. We have Salesforce.com, a really big name in the tech space. We have a slew of additional retailers that are coming out. By the way, those reports last week weren't so crummy after all. We had a lot of rising stocks there. So that's important in that framework because we do continue to get these positive report cards from companies.
And talking about some of those positive report cards, obviously that has pushed the stocks higher here recently, except for the past 2 weeks. Lee, there's actually a sign that the markets could be too expensive. The S&P's forward PE ratio is at its highest level in 13 and a half years, and that was according to a report by Bank of America. Where do you see opportunity right now? What are you buying? Any specific sectors or any names that you like?
Let me make it very, very simple, okay? We come into this year, if you had invested $1, whether it's in international or emerging markets, you have about $1.20, $1.25. I've been taking that profit, that 20 cents, that 20% that I've made in the international areas, especially in the broad-based indexes, and I've been adding them over to the U.S. small cap value. Any index fund that says Russell 2000 on it, that's what you want to buy. It's down 3, 4, 5% for the year. Outside of that, you keep your money in cash of the profits that you took, and then you pray that you can buy back at cheaper prices next month, the month after. This is the season where things get weak, starting right now. But again, I warn people, don't expect a 10 or 15% off sale. If you see 5 or 6% off in this market, I think you got to grab it and keep going forward. We will get those corporate handouts, whether Trump wants to do it or not.
And we don't, right as you're saying that, corporate handouts coming this way, we are having the stock market open right now. Wall Street starting the new trading week here. And we can see they're ringing the bell right there. They are very happy to start off this Monday, so we'll keep an eye on how the markets are trading for you guys all day today. Exactly, what will this week hold? Now, we also have to talk about another big event that everyone is talking about today, and that is the first total solar eclipse in 26 years. Now, Nicole, we know that investors don't look to the stars for guidance per se, but you have been digging into this, and there is some pattern, or maybe there isn't, about how the stocks perform with a total solar eclipse. So what did you find?
Here's one thing we can say about the solar eclipse, that we've known for many years this is coming, and it's predictable. While the political drama has been difficult to trade, at least we know this is happening. There is there is a report that in the years following a solar eclipse in the U.S., the stock market's up 17%. A year later, Sam Rowe wrote this up this morning, our managing editor. It's a fun little anecdote, if you will, but even he explains that this is really just, stock markets generally go up, first of all, so we have to keep that in mind. And that, there's no real rhyme or reason. I mean, maybe you get some help from power grids, but in terms of economic impact of the solar eclipse, there's no correlation. Maybe there's some superstition here, but maybe this is a time where we can all come together and look up at the sky safely, as we all are confused about the market and politics.
Key. Yes, exactly. And a quick look here for a market update. We had the Dow down slightly here ahead of the open, down about 7 points. So we'll continue to keep a close eye on that, and we'll see if it just stays in that trading range. So Lee, getting back, solar eclipse aside, you were talking about the potential for maybe a 5 to 6% pullback here in the markets. Is there anything that you would tell investors to avoid right now? Anything that's way too overvalued?
Anything, whether it's I would avoid some of these FANG stocks, the big large cap growth names, your big blue chips that are at high multiples. Those are the ones that are driving that multiple, that highest multiple ever that we keep quoting in the media. They're all driven by large, big growth names. So I say stay out of there. Look at small cap. Look at a great pullback in emerging market. Look at small cap international. Look at Europe. Europe's getting out of recession. Go abroad at a pullback. If you got to put money in today because there's a gun to your head, buy a nice small cap index.
Though,
piece of cake.
It does all depend